Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards, with your host, Mel Blackmore.
Hello and welcome to the ISO Show. I'm delighted to be joined by Tiffany Cheung, who is the corporate engagement lead at AlliedOffsets. AlliedOffsets are the world's largest data source and intelligence service for the voluntary carbon market. So I'm absolutely delighted that Tiffany has joined us today. So hi, Tiffany.
Hi there, Mel.
Great. Well, I mean, at present, there's a huge lack of standardisation and transparency in the voluntary carbon market. Now, we've covered carbon standards in the past on the ISO show, but that's been ISO standards in relation to ISO 14064 typically, and greenhouse gas emissions reporting and verification for organisations. But today the conversation is all about the standardisation and transparency in the voluntary carbon market. It's an area that we haven't really covered on the podcast. We have covered offsetting, but we haven't got into the detail of carbon credits and understanding about projects in more detail and the data around it as well. So as more companies are entering the market and looking to purchase carbon credits or invest in projects, it's becoming increasingly important to make decisions based on comprehensive data. And obviously this is where AlliedOffsets comes in. So you may have heard of them before, but if not, you've probably read about some of the data that they've produced because they've been in the Financial Times, Forbes, The Guardian, and many other publications in the media. And that's because there's a thirst for knowledge, I think is fair to say, in this particular area, because the carbon markets are evolving rapidly with new solutions addressing issues of trust and quality, which obviously that will resonate with a lot of our listeners who are advocates of the carbon standards and standards generally in terms of quality management. This is specifically going to be talking both in this episode, and we're going to be covering another episode on the trends in carbon markets. So this is a back to basics, and just to break down, I guess, some of the complexities around the carbon markets, specifically in relation to voluntary projects as well. Mm-hmm. So, Tiffany, I know that you've been dealing with many different types of stakeholders over the last few years, including corporates, investors, project developers, technology providers, traders and researchers as well. Absolutely delighted that you're the expert that's going to be sharing some knowledge about what these carbon markets are. Before we do that, though, it'd be great to get a bit of background on your experience and how you basically got to where you are now, how you got involved with carbon markets.
Okay, brilliant. And first of all, I mean, I know that your listeners will already know that you're a paragon of trust, but I have to say thanks very much. We did not pay Mel to say such a lovely introduction to the company, accurate as it all is. That was very nice to hear. I have been working as the corporate engagement lead at AlliedOffsets for just over a year now. So that does involve talking to a variety of stakeholders on the buy side of the market, understanding what their motivations for being in the space are, what their strategies are going into the future, their wider decarbonisation process, but also just looking at their transactional activity and how that has changed over time. Prior to this, I was working at a major environmental advisory and brokerage firm, also based in London. I also focused on the voluntary carbon markets as well as renewable energy markets in that space. And that was also really useful to give me kind of a grounding into carbon markets more widely, because I sat right next to the compliance trading desk there. So it was a really brilliant way of learning about how those two markets connect and how one kind of sets the scene for and also counters the other one in terms of what they can offer to kind of civil society as we're dealing with climate change. Prior to that, my background was in environmental geography. Obviously, the root of all this is climate change, and that's something that I'd spent quite a few years actually studying, both in terms of the hard science, the atmospheric science associated with it, as well as societal responses and adaptations to it. So I'm kind of quite glad to have ended up in a sector that is really trying to address this in a creative way that's, has a sense of urgency associated with it, but is actually taking action. I think that's something that's very personally important to me after spending quite a lot of time looking at the issues and then panicking, going, okay, well, what should I do about this?
Great. Well, it sounds as though everything that you've been doing over the last few years has led you to this point, and I think it sounds as though you're the kind of the perfect person to be a guest on the podcast today. And I know that obviously you're the author of various reports as well, and publications in relation to carbon markets. So yeah, really interested in unpacking that and exploring that in more detail in our conversation. Um, so yeah, going back to basics then, in terms of carbon markets, how would you describe carbon markets? What are they if you were to describe it to somebody?
So, in simple terms, carbon markets describe markets where carbon is turned from kind of a nebulous greenhouse gas into an asset or a commodity that can be traded. These tend to represent actual tons of CO2 that have been sequestered somewhere else in the world, and that's particularly true of voluntary carbon markets. Compliance carbon markets work a little bit differently. They might be associated with the voluntary carbon market, also known as the VCM, or they might be more simply referred to as a kind of carbon tax. And there are lots of examples of that at international, regional, and national levels. But these are basically ways of pricing carbon, both in terms of reducing emissions and also generally making polluters aware of the environmental impact of their emissions in a financial way.
Okay, great. And we've heard of the term, voluntary carbon markets. What's the difference between a voluntary carbon market and a non-voluntary carbon market? I know it's a basic question to ask, but I'm sure some of our listeners will be wondering what's voluntary about it.
Sure. So the voluntary side is that if you are engaging in the voluntary carbon markets, there is no legislative impetus for you to be involved in it. It is something that companies do for a variety of reasons, but I would say probably by volume, the biggest motivator is offsetting emissions. So often what companies will do when they are operating within the VCM is they will go, right, we are doing X, Y, Z things to address our carbon footprint, but we have excess emissions. In that case, these are emissions that we are currently unable to tackle. We might not have the technology or the finance to be able to do this, but what we know is that we don't want to just ignore this. So we would like to spend some money and invest in carbon credits that are being issued by a project that is actively sequestering and storing carbon, and we can pay for carbon credit which is representative of 1 ton of CO2 equivalent, and that will kind of be our compensation for the emissions that we haven't been able to deal with thus far. So what will then happen is that they will technically be able to claim something like carbon neutrality for that year if they have equaled out their footprint. But that is not something that you always have to do. It's perfectly possible for you to buy carbon credits without actually making a claim associated with it. One thing that's really useful about the market is that you are choosing good projects that you're able to say that there are benefits associated with, irrespective of what your initial motivations are. So, for example, it doesn't just have to be a case of you talking about the greenhouse gases that you're sequestering from the environment by proxy. It could also be a case that you want to help invest in water purification schemes or improved cook stoves, which improve air quality in domestic settings. There's a whole range of projects that you can be helping to fund by buying carbon credits.
Okay, great. That's a brilliant explanation. Thank you for that. And that was absolutely crystal clear. Are there any particular types of organisations that are purchasing carbon credits?
Yep. So within my role as the corporate engagement lead at Allied Offsets, it's a real privilege to be able to see all of the transactional history that's taking place across, I think, about 30 different global registries. Because, sort of like you, I'm very curious about other people's business in this space. And what we can see from that is that there is a very strong relationship between how polluting a sector is and how well engaged it is within the voluntary carbon markets. So as you would expect, it's the major energy producers that are operating in fossil fuels, it's aviation, maritime and ground transportation, and to a lesser extent mining and materials. These are the kinds of companies that are very well engaged. Increasingly, we also see financial services and also technology and telecommunications coming into this area. Part of the reason for that is that for these sectors, it's actually relatively straightforward for them to calculate their emissions. I'm sure that lots of them have come to Blackmores before, and for that reason, it means that they can also deal with it more easily because they have the quantification already prepared. This is something that we might see changing a bit as we see increased data center usage and artificial intelligence driving up energy consumption across a range of sectors. But as it currently stands, these are quite well-established players that have been in the market for a long time. I'm not going to complicate things too much for listeners by talking about brokerage activity, but sure to say that there's a healthy appetite in the VCM.
Okay, great. Yeah, no, that's fascinating. So, how do they actually work then? Could you just explain that?
Yeah, sure thing. So when a company decides that they want to buy carbon credits, what would make the most sense for them to do is to engage with a well-established broker or intermediary who is able to source a variety of credits for them. Now, it depends on who it is that you're engaging with, but generally it's helpful for a company to know what kind of carbon credits they're interested in or what kind of projects they're interested in. So, for example, is there a specific area or methodology that they'd like to be sending their funds to? So there's a very, very wide distribution of projects across the globe, and they range in terms of what they do as well. So there's forestry and alternative land use, there's blue carbon, there's carbon dioxide removals via technology, that kind of thing. And knowing this in advance can help the broker to actually refine the projects that they can offer to you. But it's also one of those things that lots of companies will want a certain degree of hand-holding with, which is totally understandable because of the sheer range of options ahead of them. What generally will happen is that the company can say, well, this is how many tons of carbon credits we would actually like to buy, and it's associated with our footprint from this period or this kind of product. So they'll know the volume that they want to purchase, and they'll generally have a good idea of the budget as well. So market prices will range quite significantly based off of what technology type or methodology you're going with, but most carbon credits are currently sub $15 per credit. And so that will help you to set a wider budget for your total transaction as well. At that point, your intermediary will secure these credits for you, generally like, over the counter, or they might have a direct relationship with a project developer who's able to sell it to them directly. In that situation, what will then happen is that the broker will say, right, I've done this transaction and it's on behalf of this company and it's for this footprint specifically. And if you're happy with that, they can then retire the carbon credits on your behalf. So I know that I'm jumping ahead a little bit because that's one of the next things that you wanted to ask. But what then happens at that point is that your carbon credits are taken entirely off the market and they're considered to be spent in that kind of capacity or used. So they've been taken out of the market. Nobody else can use them as an investment. They can't use them as an offset either. And you could, for example, at that point, consider your footprint to have been neutralized for that specific period.
Okay, so sorry to interrupt, but in terms of in terms of those carbon credits, then, so ideally, then I'm just thinking there are a lot of people that listen to the podcast that are very much interested in quality control standards, and they'll be thinking, so what are the kind of quality controls that are in place here? Obviously, I know that it's all voluntary, but in terms of the identification of those carbon credits, so that there isn't any possibility of another company purchasing them or another company purchasing them, so that the broker potentially selling the same credits 3 times? I mean, could that potentially happen? And what kind of controls are in place to mitigate that risk?
So there isn't a master registry, but there are several registries across the world that generally dominate the market. They vary in terms of the methodologies that they may or may not specialize in, as well as for geographies. The biggest ones that you're most likely to see in the market are known as VCS, GS, ACR, and CAR. They account for about 80% of total market volume by retirement and issuance. The way that these registries work is that they perform a bookkeeping kind of function within the space. So when projects have done their work and they've said, right, we've calculated that we've sequestered about 50,000 tons of carbon dioxide equivalent and other greenhouse gases in the last year or so, they might at that point go to the registry and ask for their credits to be issued. And the registry will go, okay, we can see that you've done this work, and we're happy that you've complied with the methodology that we set as a standard body as well. Here are your 50,000 credits. And that at that point, it's when project developers would be able to sell their credits as a commodity. Now, what would generally happen at that point is that companies who are in the market to buy would need to make a decision about which kind of projects that they want to go to, and that will determine the sort of registries that they'll be engaging with. There are registries that specialize in certain areas, like Pure.Earth, for example, does carbon dioxide removal specifically, but most registries that we've just spoken about now will do a really, really large range of them. And they will also have checks in place to ensure that project developers aren't kind of just, marking their own homework too much in terms of whether or not they're issuing really large volumes of credits and therefore able to make more money out of it, or that they're going wildly far away from the methodology that they're originally meant to be working to.
Okay, in terms of that methodology then, so by methodology, do you mean a standard or a specification that includes the methodology that should be used?
Yeah, that's correct. So a methodology refers to the way in which a specific project should be undertaken in order to ensure that the pace of carbon sequestration and storage is consistent throughout the project's life, and that is being considered specifically for wherever the project is actually taking place. There are certain environmental conditions that would mean the same work taking place would not have the same climatic impact based off of where you're going. So, for example, you might have a forestry, an afforestation methodology that's slightly adjusted because it's taking place in a different region, but the actual work that you would see taking place on the ground is essentially the same to your layperson's eyes, for example. And the methodologies are issued on a standardized basis by standards, which are often the same kind of companies as the registries as well. So it's very common for them to be responsible for both.
Okay, so the registries are ultimately responsible for the methodology, issuing that methodology, and then basically whoever's involved with the project needs to be able to comply with that methodology, provide the evidence of compliance
That's
for that
correct.
in order for it to be entered onto the registry.
That's correct.
Is that my have I got that right, Tiffany?
No, definitely. You're doing a great job of following along, because this is quite a convoluted and long process. And from the time at which a project idea is initiated to it actually issuing credits is generally 2 to 3 years. So we're kind of condensing a lot taking place down into a very small period of time here in this explanation. There is another a step in this process in terms of ensuring that there's consistency and integrity in the market, which is the fact that in order for a company a project developer to be able to start issuing credits, their work needs to have also been checked by a VVB, which is a validation and verification body. So these are third-party kind of auditors, and what they do is that they'll do desk-based research on the evidence provided to ensure that the project developer is complying with the methodology that they have signed up to use, and that they're correctly and accurately describing the conditions in which the work is taking place, that they have correct land titles and deeds for where the project is being hosted, that kind of thing, and that they're complying to local labour laws, etc. Lots of VVBs will also conduct actual site visits as well. So that's another layer of assurance that exists in the market too.
Okay. I mean, and talking about levels of assurance, I mean, obviously we're talking about voluntary carbon markets here. Uh, What do you think the potential appetite is for this to be a regulatory requirement then, and to introduce regulation into this space? Because obviously we're dealing with finance as well as carbon now, and I know that the two are becoming inextricably linked when it comes to sustainable finance. What's your view on that? And is there any kind of movement towards regulation in this industry?
There definitely is, and I would say there's two drivers for that in terms of the actual demand side of the market. First of all, is it has been widely established that for certain sectors, because of the kind of degrees of integrity to which they're being held, it's quite difficult for them to engage in a space which is unregulated, like the voluntary carbon market is. So obviously the legal sector is one, and financial institutions would be another one. So for them to be engaged in the market, they are really keen for sort of financialization of this space, and for there to be a certain degree of oversight, which the sector hasn't necessarily seen quite to that degree up to this point. The second thing, there's a big driver of increased regulation and high integrity in this space, is also the fact that we're now seeing the compliance and voluntary carbon markets converging. Now, when you're talking about, a government taking part in this sector, there's a whole new degree of risk involved in that, and also it's really important that they're basically spending public money, and it's really important that they're going to be investing in kind of infrastructure that is honest and does what it says on the tin. So that would be another major driver for integrity in the space. This having been said, aside from those two things, there's quite a lot of, I would say, a lot of actors in the market feel a great deal of pressure to ensure that they're doing the best thing possible now, specifically because there has been a lot of negative press that to some extent was well deserved in this space and needed to happen in some kind of capacity, because poor regulation in the space and dishonest actors have obviously tarnished the reputation of the VCM, and that's really unfortunate because at the end of the day, this money needs to go to this kind of work, and the more ire that this space receives, the more unwilling that buyers are to engage, and the less that we're seeing this kind of really important work take place.
Okay, no, thanks very much for your opinion and insight on that. It'd be really interesting to see, yeah, how this evolves over time. I think obviously there are pros and cons of regulating the marketplace. Yeah, without a doubt. And I guess from my concern, if I was a corporate, for example, understanding about the retirement of credits, and in terms of how that works. You mentioned about that kind of being the end of the process. Could you just expand on that a little bit further, Tiffany?
Sure thing. So the point at which a carbon credit is retired is when it has been taken totally out of circulation for the market. And so that means that no other broker, intermediary, or end buyer would be able to use that credit in any kind of capacity. When you actually look at the transactions, which is what I do on a weekly basis, that is when you'll be able to see that a company, either themselves or they've had an intermediary retire a credit on their behalf, and that kind of gets attributed to them. It's like having the receipt to say, this person has purchased this product, it belongs to them now, and nobody else can use it. If you were to be using that carbon credit in order to compensate for your emissions, that's when it would be accurate for you to claim that you've offset using those credits. And at that point, you would consider next, okay, so do I want to try and reduce the tons of CO2 that I need to offset next year? And the answer would hopefully be yes. At the end of the day, whilst this is all voluntary activity, it does still come at a cost to the business. So we increasingly see quite a lot of companies considering things like internal carbon prices, which they're using to help them understand what kind of financial impact their emissions might have on the business as a whole.
Okay, great. And just finally, thanks very much for breaking down and helping us to understand about carbon markets. And I'd like to understand just finally a little bit about Allied Offsets' role in relation to the data in this space, because obviously it helps organisations to be able to make informed decisions. because you've got such robust analytics and up-to-date information. Can you just explain how that those the different types of stakeholders are using this data and how you provide services in relation to this? Because I think I noted on your website you're also supporting work with researchers, brokers, obviously corporates, which we've discussed. Could you just explain about the services that you provide in a bit more detail?
Absolutely. So our data set is so wide that it's actually quite difficult to answer this question in a concise way because we're able to help so many different stakeholders in this space. I would say there's a couple of particularly interesting use cases for our data, which is one, for corporates, it would be the case of comparing how their activity measures up to competitors or peers within their sector. Because we provide such a long view of historic activity, it's really useful for corporate buyers to be able to see what activity has already been taking place, what projects are being favoured by their competitors, and what kind of price points they should be looking at as well, which can be a really useful data source if you're trying to go back to your CFO and say, no, I promise you I've used our budget widely, we paid less than our competitor did by 20%, that kind of thing. Another common use case is that project developers will want to see who is active in the market and who they should be targeting for funding and that kind of thing. That's very common, and it's especially true that because we can see specific buyer activity broken down by region as well as methodology, that means that project developers have a really good chance of being able to engage with buyers who are entering into the space and might not have established those direct relationships yet. And that would be a good time at which a project developer could go, right, we match the profile of the kind of activity that you seem to favour. Why don't we talk about having direct purchasing agreements in place to ensure that you're always going to have a secure supply for as long as you need to be offsetting or for as long as you want to be investing in this kind of area. Another really interesting space that we're working in is consulting increasingly with governments. The reason for this is that obviously voluntary carbon markets can be actually like a huge source of income from the private sector into the public purse, essentially. The way that this works is that you might have a voluntary carbon market scheme that's associated with a compliance scheme. So good examples of that would be such as in Colombia, for example. And what happens there is that in lieu of paying overall significant tax or buying allowances, those national governments or other regulatory bodies might tell companies that are under the scope of the tax that they are instead allowed to purchase a certain proportion of credits from the voluntary carbon market. And what that would do is actually ensure that that money is being put into projects that are also doing good, and as well as reducing emissions and making those emitters aware of the price of the pollution that they're actually releasing into the atmosphere. This is all work that is actually expanding quite a lot. We're seeing that a more sophisticated and diverse group of actors are wanting to engage with us in this area as they realise that there's quite significant environmental benefits to this area, but also that there's actually also quite a lot of investment opportunity here as well.
Yeah. Okay, well, that's absolutely fascinating. Oh, I really enjoyed chatting with you today, Tiffany. It's been brilliant to learn so much more about the carbon markets. I had a bit of an understanding, but you've certainly helped to explain that really clearly, which I'm sure that our ISO show listeners will be appreciative of. They have a better level of understanding after listening to this podcast. So yeah, thank you very much for joining us today.
Thank you so much for having me, Mel.
Great. And look forward to seeing you on the next episode of the ISO show, where I believe you're going to be explaining more about the trends and some forecasts and looking at what's actually happening in the carbon markets right now and potentially in the future as well. So yeah, looking forward to hearing those insights based on the data that AlliedOffsets have been collating and reporting on recently.
Yeah, that will be absolutely grand. Thank you very much in advance for that opportunity.
Okay, no problem. And the links for Allied Offset and the information that we've been talking about today are going to be included within the podcast show notes. So wherever our ISO show listeners are listening to this, whichever media player that's on, the show notes will be available as well. Okay, thanks very much for joining us. I look forward to catching up with you on the next episode of the ISO show.
Looking to achieve certification to an ISO standard or just need a helping hand with ISO compliance? Contact us at blackmoresuk.com.